Our panel is ready because we need to cover Taiwan Semi. A look at those earnings, talk about the banks and what those earnings really mean, and more, and all things tech. Jay Woods, Chief Global Strategist, Freedom Capital Markets, is with me. Olivier Blanchard, Research Director at the Futurum Group, is with me. Let's start off with Taiwan Semi. Olivier, some of your thoughts on Taiwan Semi.
You know, I expect another super strong quarter. We're looking at probably 38% year-over-year growth, about like 15% quarter-over-quarter growth. The nets are super solid. I think everything is basically just the continuation of what we've already seen with TSMC being a leader in the space. A lot of demand from AI. Big clients are doing really well, primarily Nvidia. Also some pull from Apple and some other big names. So essentially everything is good in terms of the technology, the demand drivers for all of TSMC's products.
So today it's at a new high, 238. Do you think it still has room to move to the upside, Olivier, quickly?
I think so, yeah. I think we're still good. The two downsides of this, one is still the uncertainty about the tariffs. So we don't know exactly what the impact will be. And I have some ideas if we just want to circle back on that in a minute. And the other one is just how strong the Taiwanese dollar is compared to the US dollar. So we might see just a little bit of pressure on the margins there, as much as 3 percentage points on the margins, just because of the higher value of the Taiwan dollar. So that has nothing to do with demand, has nothing to do with the outlook, but it is a factor.
All right, looking at Taiwan Semi, which really has an incredible bounce back. I mean, it's up 50% or more off the lows.
76%.
Yeah, I'll say 3 months it says 52%, but off those lows it's had an incredible run. New highs at 238. Where do you think this could be headed? What will be the catalyst to drive it higher?
Well, I think Olivia nailed what the catalyst would be, but then let's look at it from a trading perspective. I just went back and looked. How's it reacted after earnings? 10 of the last 11 quarters, the stock has been crushing it. We know that. It's traded lower. It's been the least volatile stock in a very volatile sector after earnings. In fact, the biggest move of those 10 down moves was 4.25%. The average move is down 1.4%. The one time it was up less than 0.5%. So we think that the price already is into it, and we've seen that in a lot of stocks. And when we transition to financials, I'll stress that fact. The price action may be in it, so this has to be a blowout quarter, blowout guide for this to really trade higher. So what I look at is an opportunity on a pullback. Where would I want to buy the stock? And this stock broke out to all-time highs ahead of tomorrow's numbers. Right. So I would look at the 220 to 225 level. If it pulls back,
you could buy
to buy the stock, because the long-term story has not changed. And yes, there are concerns. Let's see what the guide is. The CapEx spending continues to be, but for all intents and purposes, they hit on all cylinders. There are concerns, obviously, with the tariffs, with the dollar, but as far as what people are spending and how they're using them, I think this is a stock over the long term you want to be in. But earnings, not going to really make noise based on what we've seen in the past.
So it could provide an opportunity. You could trade on earnings and actually buy it on a dip, because you said it often dips on the earnings. Yep. Let's get to the financials. I mean, what stood out to you, Jay, on the financials thus far? We've already had at least 6 names report.
Financials crushing it. JP Morgan crushing it on all metrics. Their investment banking, they were expecting a 14% decrease in earnings. They got a 7% gain. They announced a buyback. So this is after the stress test, and now they increased the dividend as well. So I think it's smooth sailing for the banks, but like Taiwan Semi, these banks have gone on a tremendous run going into earnings. For them to go much higher, Citi, the one exception, although pulled back today, it was going to take a ridiculous beat and guide. Goldman, best quarter of trading in their history. That's a long history. To me, everything is pointing to nice trajectory up, but the stocks are a little tired. So what we do is we look for opportunities to pull back. Goldman, 690, that was the last gap up. Will it exhaust or will it hold? I think it will hold and give investors an opportunity to buy the stock. But we've had a tremendous run. What we do is digest gains. The news backed up the run, and now we see what the next catalyst higher will be. And I think that will be M&A activity. I think that will be IPO activity. So the investment banking side should ramp up. So to me, great results. You know, the one exception, Wells Fargo,
Okay. Yeah.
Bank of America, But overall, I think the largest three banks, the Morgans, the Goldman, the JP Morgans, are set to do great things going into the end of the year.
Olivier, I don't know if you had any thoughts on the banks, but I also wanted to ask you about Qualcomm. That was a name that we've talked about so many times. You thought AI and Qualcomm had a great sort of linear path together. Any thoughts on the financials, and then tell me about your thoughts on Qualcomm.
Yeah, still good. I mean, the main thing that we need to focus on is how Qualcomm's diversification strategy is sort of like super well timed. So they got into automotive a few years ago, and people were a little bit skeptical about it, and they've really scaled that super well. They're doing that with IoT. I think that there's going to be a huge push in the industrial IoT or the commercial IoT with AI on the edge for smart cameras, drones, robotics, all sorts of things that work that are really important to sort of like industry 3.0 in the age of AI. And so one of the things that I'm looking at very carefully with that, with Qualcomm is they're essentially slowly losing Apple's business, right? They're no longer going to be their primary provider of modems for the iPhones, for instance, as Apple creates their own. And so you're seeing these sort of gains in one area with sort of like shrinking in other areas. So Qualcomm overall is still super well poised with really good AI chips, really good AI IP at extremely low power, which is really good for edge applications. So anything that's phones, PCs, all of the AI at the edge, that's Qualcomm's play. But at the same time, we are going to see some segments of Qualcomm's traditional business sort of fade away in the next few years. So it's a little bit of a give and take, but it's still on the upside.
Yeah, I mean, as far as the fundamentals and the story, there are drivers to help Qualcomm to continue to go higher, losing some Apple business, as you said, because they're going to be making some of their own. Not necessarily particularly great, but this stock, which there were a lot of high hopes for this stock, you know what? It's the pits. I mean, really, I'll just say 1 year down 25%. And people are really on board with this name. Do you buy it now?
Yeah, I think, Qualcomm has always underperformed with investors, and it's always been a little bit puzzling. It's a little bit like when AMD, one of their other competitors in certain areas, reports really good earnings. They have really good performance. We're starting to see the parity happen between training and inference, which is really a big play between Nvidia and AMD. We're seeing some of the same things with Qualcomm. They report really good earnings. They have really good performance. The on ramps for new categories of IP growth are there, but the investors don't necessarily buy it. And it might be a measure of how Qualcomm's business is a little bit too complicated. And they're not necessarily always super good at articulating the full picture of what they're doing and how that translates into revenue. Yeah.
Yeah, because the shareholders must be frustrated. Great to see you both, Olivier. I thank you for being with us. And Jay, since I still have another quick second, a final quick thought on all the stocks you're following, particularly tech. People love tech.
Yeah, they do.
What are some of your favorite names these days?
Favorite names? Well, I mean, a lot of them have gone on tremendous runs, but I still like the software stocks. I still like cyber stocks. They've gone up. They're coming in, taking a bit of a break. Volatility is going to be the theme down here. We saw it intraday today when the president came out and said he was going to replace Jerome Powell. That got a lot of people on edge. He's looking for that loophole. Didn't happen. People need to remember that it's a 12-member panel that votes on Fed rate cuts or Fed rate hikes for that matter. So even if he was able to get rid of Powell and replace him, the independence is the most important thing. So that was what caught our eyes here and ears here. But I still love the big names, the Broadcoms, the Nvidias in tech, Oracle. Oh my God, these things have had major moves, but to me, they look fantastic. So I look for that, and I'm hoping that we see some IPO activity pick up in the next quarter. I'm hearing good things.
Jay Woods, Olivier Blanchard, thank you both for being with us.